Guys, I'm going to tell you the truth about getting rich quick in real estate. And it is literally the opposite of what every other person out there is going to tell you to get you to click in their videos. Real estate is one of the best places to build immense wealth, not just a little bit, incredible amounts of wealth. Unless you have some amazing trust fund with millions of dollars to go buy real estate right now, it is going to take longer than everyone out there wants you to think, but that's okay because money earned quickly will leave you very fast. We're here to build wealth over the long run that stays for a long time. In 2003, I just graduated from college at the University of Michigan. I wanted to buy real estate. 2 years before, I was at home at dinner with my father, and one of our neighbors was a few tables across. He came over to say hi, older gentleman, 75, 80 years old. He said, "Paul, what are you studying?" I said, "Economics." He said, "Great, can I give you some advice?" I said, "Sure." He said, "Nobody you know that's rich does not have real estate. Everyone has real estate who has money." And he said to me, "But here's the key. Everybody wants to make money fast. It takes time. But eventually you wake up," and this is where I always get this adage you'll hear me say over and over. You wake up 10 years later and you're like, "Oh my gosh, my property's worth how much? My cash flow is how much?" This is incredible. It's the compounding effects of real estate that take time that are so worth it. So what did I do? I started looking for real estate. And I was very fortunate. I was in Ann Arbor, University of Michigan, and I was looking for on-campus housing. And I was like, wait a second. I am going to collect $4,000 a month in rent. My mortgage is $5,000 a month. That doesn't make any sense. And I remember the realtor telling me, "Yeah, but it's about appreciation, the property going up." And I sat there and said, you know what? It's not for me. So I graduated in 2003. And in December of 2003, I started buying my first real estate. What did I buy? I bought a 2-unit in Sylvania, Ohio, which is a suburb of Toledo. I paid $75,000 for it. And my rent was 2 units times $379 per month in rent, which is $758 a month. And I was always told, hey, you take your monthly rent, add 2 zeros, that's what you should pay for the property. That's what I paid for this. And my mortgage payment was like, with tax and insurance, $640 a month. And I thought to myself, damn, I'm making $118 a month. This is going to be great. Guys, spoiler alert, 7 years later, I sold this property for $70,000. Why? When the rents were higher than $379, because this was a garbage price to pay. Don't listen to the people out there telling you you can get rich doing this. You will not get rich doing that. It'll feel like you got rich because 30 years from now, you have a paid off property and you're collecting $1,500 a month in rent. But when you actually do the math that I do with our real estate calculator in our software, this real estate calculator out here is created to show you the returns on your deals. Let me show you one. I did 1 unit at $150,000, generates $1,250 a month in income. So a little bit more than the metric I told you before. But let's say I paid the $125 per month, $125,000 off the $1,250. Well, remember guys, the mistake I made was thinking there'd be no other expenses between my mortgage, tax, and insurance. Guys, there's maintenance, there's vacancy, there's utilities from the vacancies, there's cutting the grass, all these things that weren't accounted for when I bought my first property. Because all I was taught was if you can cover that mortgage, you're going to make a lot of money. Well, let's see if that's true. Income, $1,250 a month. Expenses, I put in $6,500, only $500 a month plus tax and insurance. So let's go to the recap report. $26,000 in down payment. That's my down payment plus a few fees. And look, guys, negative cash flow, negative cash flow, negative cash flow. Year 4, finally made some money. Now, don't forget, you're also paying down debt as part of this mortgage payment. But let's look at our IRR. Over a 30-year period, the IRR is 12%. Guys, that's great. That's better than the market average of 9 or 10%. But is that really worth it for having that lack of liquidity? Is that really worth it here? And guess what? Mine wasn't this. Mine was way lower than that. At least here, the mortgage payment of $600, $700 a month, $650 here, plus tax and insurance is way lower than $1,250 in rent. But this is what they don't tell you out there. They don't tell you that just covering your mortgage is not a good enough return. You might as well invest in the stock market. Let me show you even further. So I changed the expenses now so that my break even and cash flow is basically there for the year. Okay, let's go back to my IRR. It's better, 13%. Now we're talking. But I also assumed it was just buying one unit, which is a home. And homes have more value in the exit than it does in buying a 10 or 20 unit property. If you do this on much bigger properties, you're not going to make 13%. The way this works is you buy a single family home that can be sold to somebody as a single family home, because people will always pay more money for their individual home than an investment property of 5, 10, 20 units. That's why you'll always hear me say in future videos that buying bigger properties makes more money than smaller properties. This 13% ain't bad, as long as you can cover your mortgage. And if your goal is just to buy single family homes you can do that with, we're the channel for you. And I will help you get better and better at that. But if you think for 1 second that there is a quick way to get rich in real estate, you're not the channel for you. You are not going to get rich. I've never heard of anybody getting rich very quickly in real estate. I've never heard of anybody getting rich and holding it for a long time in anything. The reason real estate does so well is it's so difficult to get in and out of real estate that it takes time to buy and sell. You don't make emotional, irrational decisions as often. With stocks, you click, boom, done, you're out. You get an emotional, you see the news report, sell. If you see a news report about real estate, it's going to take you 3 to 6 months to sell the property. By then, you've probably felt, okay, I don't really want to sell it, etc. And that shows the power of real estate. You can stay in, build equity, pay down debt, and as the incomes in this country go up and up and up, your income, your revenue will go up in the real estate, and therefore the property value. Look at the property values here. Look at this recap report. Value of property, 150, 155, 160. Fast forward, it's only 3.5% a year. Fast forward, $400,000 in 30 years. Those small little gains, $400,000. If every single year for 10 years you do this, in 20 years, because you have to look at the last 10 years, here are the values of the real estate you have. 300, 300, 320, 330, 340, 354, all of these added up together is your total portfolio. And I'm going to say the average is you're going to have about $3.5 million a year of real estate, in total real estate. And just at a 6% return, if you had them all paid off in cash, that's $200,000 a year in income. So again, guys, getting rich quick does not exist in anything you do in life. If you're looking to invest $1 to create $20 tomorrow, ain't going to happen. Never going to happen sustainably. Now, what it can do for you, what real estate can do for you is I'm asking you one thing. Are you able to save a few bucks every 12 or 18 months to go buy one great real estate deal? If you're able to do that, I can show you a way in which in 30 years you have $10 million in net worth, and that's not an exaggeration at all. That's not a clickbait, that's nothing. I can actually show you the numbers where it happens. So if you want to learn more about how to get to that, I will walk you through that from beginning to end. Please watch this next video. Thank you very much for your time.